Hey everyone, welcome back. Today we're going to take a quick look at Airbnb and see if their $100 billion valuation is reasonable or not. They recently released Q1 numbers and they are pretty strong. They reported 102 million nights and experiences booked in Q1, which surpasses their pre-COVID numbers, and it's the first time ever with 100 million plus bookings in a quarter. The gross booking value is also up 70% compared to pre-pandemic times. Revenue is up 80% versus pre-pandemic levels, and they still reported a net loss, but it materially down. From a cash flow perspective, they are cash flow positive after we adjust for the impacts of stock-based compensation. Things are actually looking pretty good for the business, and I think they have kind of a proven business model at this point, and in the next year or so, I would expect to start seeing a net income. For Q2, they provided revenue guidance of roughly $2 billion, which compared to Q2 of 2021, which was $1.3 billion, this would be about a 55% growth rate for the quarter. Based on this, I think they will land the full year somewhere above 50% and below the Q1 growth of 70%. But now let's hop on over into the DCF and see what we're getting. I'll start with my revenue assumptions. I've taken a kind of shortened approach here and haven't built out a full model based off nights and average daily rate. And the reason being is I want to gauge if there is actually any potential value in Airbnb, if they're fairly valued or not, before building on a kind of over-the-top model. What I have done is taken the midpoint of Q1 and Q2 growth for 2022, which comes into 60%, and layered that in for the full year. I think this is reasonable as we have a ton of pent-up demand from individuals to go travel. And now that lockdowns and mask mandates have ended, I think this will benefit them. For future years, I've lowered the growth to an extent. I expect 2023 to be half of 2022, but I still expect significant growth in future years. And then I quickly reduced the 2023 growth over the next 5 years until we get to kind of a high single-digit growth rate. In total, this has revenue going from $6 billion in 2021 to $32 billion in 2031, which is 5 times the current level. However, we know 2021 was impacted by the pandemic, and it's hard to say what a normalized year would have looked like. So this turns me to looking at the 2022 estimate of $9.5 billion, which I think seems pretty reasonable based off Q1 results and guidance for Q2. Based on this number, we're actually only tripling revenue in the next 9 years, which doesn't seem all that crazy to a company that has been experiencing pretty crazy double-digit growth prior to the pandemic. Now let's talk about the expenses. I think this is a really big part of the Airbnb story, and it can kind of make or break them. My model has stock-based compensation removed. If you go over to the income statement tab, the top section actually does include stock-based compensation, and it's backed out on the DCF based off reporting, which I actually have captured below the income statement. I have the stock-based compensation broken out by kind of subline. But now back to the DCF, I have COGS staying flat. It's historically been around 25%, but in 2021, they appear to have had the ability to significantly improve COGS as a percentage of revenue, and it was also their highest revenue year ever. This leads me to believe they'll be able to continue these efficiencies that they most likely unlocked during the pandemic. The next big one is operations and support. I actually have this jumping back to pre-pandemic levels. I think that this is kind of one of their most important costs that they have. If the end customer and the host have kind of bad interactions with Airbnb and can't get their issues resolved quickly and timely, the platform could see a lot of churn. So they need to make sure they're investing heavily here for good support staff. Next is product development. I expect this to actually improve over time. My thought is the core product is pretty much done at this point. They do have an announcement coming out on May 11th that they claim will revolutionize travel, but I think at this point, the core product development should mostly be done. They may start expanding to other areas, and in the absolute dollars, they will be spending more, but as a percentage of revenue, it's definitely going to get better from here on out. Sales and marketing, this is a big area as well. What I've done is assume they will actually double their marketing budget from 2021, and then slowly grow that in absolute dollar amount. I would think spending $2 billion plus annually, which is what I've layered in, on marketing, you should be able to definitely drive the growth we have projected, because it's almost double what they've spent historically. Last is G&A. This should improve as the company grows. These functions scale efficiently. You don't need a new accountant every time revenue increases $1 billion. So with all of this, we actually end up with a valuation between 88 and 96 billion, which is actually pretty in line with what the market is reflecting. The market is currently trading Airbnb at around $140 a share, which equates to about a $90 billion valuation. One thing, I just briefly mentioned here actually is their announcement coming out on May 11th. They are announcing some new features to the platform, and it looks like, depending on what they are, it could substantially change how we view the business, and we may need to adjust our DCF if it truly is a revolutionary launch of a new product. I'm not sure I'm convinced just yet, but we'll have to wait and see. After that announcement, I think I actually am going to come back to Airbnb because I like the company and kind of refine my revenue forecast, dial it in based off kind of number of bookings and the average daily rate and then the percentage that Airbnb takes, and see if we get a similar conclusion. But I do really like this business. It's seen really strong growth, and I like how it's a kind of different model than the traditional hotel model. We don't have to tie up a lot of capital to grow and expand the business. From that standpoint, it really is a cash effective business, and I like how it operates. So, I think Airbnb could be a buy depending kind of the news that comes out next week. And if they actually see strong Q2 and Q3 demand like they saw in Q1, I think Airbnb could have a lot of potential in the future. But that's all I had today. As always, thanks so much for watching. If you have any questions or comments, please leave them below. And as always, please like and subscribe. Thanks so much.